All right. What is up, tycoons? What is up, traders? Super excited for today's video. Lots to go over. We're going to break down ZIM integrated from a little bit more of a fundamental standpoint. All right. We're going to see how it's possibly set for new lows in 2023. But as a trader, it's got some really good setup. So I'm going to break down all of that. All right. A quick summary is recession odds for the U.S. economy have increased with a near 70% chance of a recession in 2024, impacting ZIM integrated shipping services. Now, shipping rates have fallen to a new post-pandemic low of $1,592 per container, adding pressure on margins and potentially leading to a complete suspension of dividends. Now, their EPS estimates are set for a new round of downgrades, with shares expected to make new lows in the coming weeks and months. So there's a lot to go over. All right. If we actually dive into the chart right now from a short-term standpoint, it looks like some interesting things are happening, and we could potentially be looking for a breakout here. There's an important level on the RSI that we're going to go over and really break down some of the key levels over here that we'd be looking to target for a potential move to the upside. So smash that like button, subscribe to the channel if you guys are new. All right, we're going to use today's sponsor, Simply Wall Street, as well. There's a link in the description down below. Okay, you guys can get a 14-day free trial and up to 40% off. That puts you at less than $200 for a full year subscription membership plan to Simply Wall Street. It's a really great platform that I've been using for a long time. Glad to have them as a sponsor, so be sure to check that out. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the full disclaimer, and we'll go ahead and get moving forward. Now, recession odds for the U.S. economy have been going through the roof in the last few weeks, with investors now widely expecting a recession to hit in early 2024. The market now prices in a near 70% chance of recession in 2024, which is set to put ZIM integrated shipping services further under valuation pressure. Shipping rates for 40-foot standard containers have fallen to a new low last week and decreased 5% week over week to a new post-pandemic low of just below $1,600 a container. Now, I believe given soaring expectations of a recession, earnings estimates for ZIM integrated shipping are set to reset sharply lower, and the risk of an adjusted EBITDA downgrade has risen sharply lately. Therefore, I expect ZIM's negative EPS revision to trend to continue to be negative, and expect shares of ZIM integrated services to make new lows in the coming weeks and months. Now, a lot of this is based on recession odds exploding, right? And recession odds going higher. Now, I drop a lot of, macroeconomic and macro data videos. All right. If you're not subscribed to the channel, subscribe so you guys don't miss those out. This video is based more on us actually having a recession and not the soft landing that everyone thinks that we're bound to have. So if we do get a soft landing and we avoid the recession, you know, there is a chance that ZIM could actually recover and things could go a lot smoother. But again, being that recession odds have exploded lately, at the beginning of the year, the expectation was that the U.S. economy would go into a recession in 2023, in part due to the financial crisis that played out in the regional banking market following multiple bank failures, including SVB and First Republic. Lately, however, expectations have shifted, and the market now seems to expect a recession to manifest itself in 2024. Now, keep in mind, in 2022, they said that we were having a recession and that it was going to come in 2023. Now 2023 has come and they're pushing it back to 2024. So this is the most longest anticipated recession ever. And will it ever actually come? That's one thing you want to ask yourself. Now, the market expectation is now for a near 70% chance of recession in 2024, which of course would impact a cyclical shipping company like ZIM. All right. Now, a recession would not likely add to pressure on containers carrier freight rates, but also on the company's container volume, which has seen a steep decline in the first quarter. ZIM integrated shipping containers volume fell 10% year over year in Q1 to 769,000 containers. A recession in 2024 is likely going to lead to a further contraction in the firm's container volume. Now, this chart right here is the probability of recession. Okay. And so if you see here, it's been increasing exponentially. All right. And what we're seeing is that January, March, there's a high likelihood. Okay. And people are pricing in nearly 70% chance of a recession by the end of Q1 of 2024. And the market is forward looking, right? So sometimes the market prices in these recessions, and then by the time the actual recession comes, the stock has already bottomed and is starting to rebound. All right, now shipping rates fall to new low, adding pressure on margins. Shipping rates made a new post-pandemic low last week as well, dropping to just below $1,600 per container, and is showing a 5% year-over-year drop compared to the previous week. Based on last week's shipping data, shipping rates have now declined a massive 85% compared to a pandemic high of $10,377 per container, and freight rates may have further to fall as pre-pandemic shipping rates. Now, that's what this chart is showing you guys right here. You're looking at the Jewelry World Container Index, and we're seeing it dropping, and it's been on a very steep decline, and it's really been, lessening, okay, and decreasing the rate at it, which is dropping, but it's still in negative declining territory, right? We're not seeing an uptrend here. This is a very clear downtrend, right? So this is something you want to consider when investing in a ZIM. Now, investors must get ready to deal with the complete elimination of the dividend, right? And I had a bunch of ZIM shares back in the day. All right, I had a bunch of ZIM for a very long time. And it was paying a huge dividend, a very, very fat dividend, and I was dividend chasing, right? And yield farming, yield chasing, which in those videos I made it very clear that that's always very risky, and that at any time these companies can slash away the dividends, right? When you see companies paying 50, 60, 100% plus dividends like ZIM was, that's not sustainable, right? They're not going to be able to continue that forever and ever and ever. So you have to, be ready with, for the eventual cut or elimination of that dividend. Now, that is initially what attracted many investors in the past was their generous dividend, which is calculated on the company's quarterly net income. So a lot of people also didn't realize that that's where the dividend came from, was from the company's quarterly net income. And in the first quarter, ZIM has seen a dramatic deterioration of its operating condition due to low freight rates, which has been reflected in the company's plunging adjusted EBITDA and free cash flow. As a result, the shipping company did not pay a dividend for Q1 of 2023, and investors must be prepared to see a complete suspension of its dividend. Based off of EPS estimates, ZIM is not expected to be profitable in the next 2 to 3 years. And since the firm pays a variable quarterly dividend based off of probability or profitability, investors must entertain the idea that the dividend gravy train is about to stop. So, if EPS estimates are going to be correct in the future, then there's that chance that the dividend is not going to be paid, which is what we saw in Q1 of 2023. A lot of people were like, well, they just stopped paying dividends all of a sudden. Well, people didn't realize that it was coming from the company's quarterly net income. And so they didn't have any net income, and they don't have any net income to pay a dividend with based off of, right? And you can see this here, all right, when you take a look at their dividend, all right, they paid a really fat dividend, and I had the stock for about a year, all right. Now, of course, the share prices did take a plunge, so I did have to sell the shares there for a loss, but when you look at what I got paid on the dividend, was still able to make a nice income off of that stock, as well as through selling covered calls and cash secured puts, different things like that, okay, using the wheel strategy. But you can see here that it spiked up really huge here, came back down, went back up a little bit, came back down, came back up. All right. And, this essentially is what their dividend has looked like over here. And, we just want to prepare people for the possibility that the dividend could be completely eliminated. So, just trying to put some good, unbiased and, more of like, just kind of warnings out there. Okay. I don't want people to be buying blindly into things just because they see a video that, hey, dividends are great ways to earn passive income. And then they don't know what's going on with a company, and they see it's paying some huge dividend, and then all of a sudden it's not. Now, the EPS revision trend is set to get worse, right? And if you look at the EPS estimates for the current and for the next fiscal year, those are going down, right? That's what we're looking at on this Y charts chart. All right, now it's worth noting that analysts have lowered EPS estimates broadly for all major shipping companies, reflecting deteriorating pricing environment as well as demand weakness, which have been reflected in contracting container volumes in Q1. So it's not like this is something that's just specifically happening to ZIM, right? It's more of an industry and sector as a whole, and weakness in that environment as a whole, and ZIM is being impacted by that. Now, again, if we don't get that recession that they're pricing in, all right, maybe this is a good buying opportunity. All right. These are things that you have to think of, right? You have to buy when everyone else is panicking. All right. And, Warren Buffett's quote is something like be fearful when everyone is greedy and be greedy when everyone is fearful. And there's a lot of fear. There's a lot of FUD right now surrounding, the shipping sector and the logistics sector as well as ZIM. Okay. Now, if you take a look at some of the risks with ZIM integrated shipping services, there's a number of risks that could include a continual decline of freight rates, which could return to pre-pandemic rate of around $1,000 per container. Now, the biggest short-term risk I see for ZIM is that the company will be forced to lower its adjusted EBITDA guidance for fiscal year 2023, which is currently still set at a range of about 1.8 to 2.2 billion. Thirdly, there's a risk that ZIM integrated shipping services will continue to see a contraction in its container volumes, which will further add to margin and free cash flow pressure. Now, the final thoughts is that given the sharp increase in recession odds for the U.S. economy in the last couple of weeks, as well as shipping rates dropping to a new post-pandemic low, I believe that ZIM integrated shipping services EPS estimates are set for a new round of downgrades and that shares are set to make new lows in the coming weeks and months. The shares are already trading near one-year lows and have not seen any positive momentum ever since the company presented its disastrous earnings sheets for the first quarter, which included the announcement of an eliminated dividend. So, now that we've gone through some of the fundamentals, let's actually dive into the chart, okay? Now, I'm much more of a trader myself, and so right now, I see a very good opportunity for a potential trade, right? And the reason being is we have this nice little triangle pattern here, okay? Now, in full technical definition, this is a descending triangle, right? We have this baseline here. We have our downward slope, and this is typically known as a continuation pattern. And so what you would look for is continuation of the trend. So right here, we can see that we're in a downtrend with a downtrend continuation pattern. If we break below this level here, all right, just above $12, there's a very strong likelihood we could head lower. Now, in the last video, in the last TA video I showed you guys this bearish channel that we had forming, and we were looking to see if we were going to establish demand in this demand zone here. And you can see that we got a slight bounce, but earnings right here really crushed the stock. And where did we bounce at exactly? Right at our bearish channel, right? Where we touched once, we touched twice in the past, and we actually came down here and bounced perfectly off of this zone, following the technicals very, very well. Okay, so there is the possibility we could see a move to the upside and a breakout to the upside. Okay, so what you would be looking for is to see if we break this trend line here on the daily chart, and your targets are going to be right around 1464, 1528, and 1592. Those are going to be your major retracement levels, meaning that after this massive move down, you can see we've consolidated. And if we were to retrace to all of these levels, this is completely healthy retracement territory to possibly continue the downtrend, right? The reason we use the fibs is because nothing moves in a straight line down and nothing moves in a straight line up. You get a move down retracement continuation of the trend, or move higher retracement continuation of the trend. And so you can see here that we've had this move down. We really haven't had much retracement. Okay, we did bounce up here to our 38.2% retracement level at 1464, and we came back down. All right. But we haven't seen a major move to the upside. Now, this prior demand zone, okay, aka support that we had in the past, is going to turn into new resistance and new supply. So if we were to get a move up, okay, we would also be looking at this area in here for potential shorts, okay, because this is where old demand becomes new supply, old support becomes new resistance, and this would be an area of liquidity that the market could be drawn towards. So if we do get a breakout to the upside, all right, it's also going to put us right there at the top of our bearish channel right here, okay? Which again, following technical analysis, there's a lot of things saying that this is an area of attraction where the stock could be drawn towards for liquidity to ultimately push the stock back down lower, heading towards its next earnings call, okay? Now, there's no guarantees that can happen. All right. If we wanted to, we could say that not only do we have this descending triangle pattern right here with the clear downtrend, descending triangle, it's a continuation pattern. You would be looking for a breakout to the downside. You could also say that this right here is a bearish inverse cup and handle, right? It almost looks like a very textbook cup and inverse cup and handle right here. I'll make it in white so it's a little bit clearer. You see our inverse cup, you see our handle. And again, if we break this line right here, it most likely we're going to see a move like this back down towards the bottom of that channel. So it definitely is on my watch list right now. I like to trade options, and so if we get a breakout to the upside, there's good upside trade possibilities there. And if we get the inverse cup and handle or descending triangle pattern right here, there's good downside potential as well here. Now, one thing that I want to mention is the RSI, which I talked about earlier. If we take a look here, we had this initial bearish divergence, right? So take a look at how the stock is making these higher highs, right? If we were to look here, we have a high, and then we have a higher high, right? So we're clearly in an uptrend here, but on our RSI, we had a high and then we had a lower high. So at this point, this is a term known as bearish divergence, and it's an indicator you could see some bearish activity in the stock. And sure enough, we did drop back down below. And each time we actually had a rally, we rejected this bearish divergence trend line. So if you take a look and we count these, we had 2 right here. Okay. And then what did we get? 3, 4, 5, 6, 7, 8, 9. 9 times we've rejected this trend line, guys. The more times you reject you test any given level, whether it's a trend line or a line of support or resistance, the weaker it's going to get. And so the increased probability of us breaking out from this level is increasing due to the amount of times that we've tested it. So this does lead me to believe that we could potentially break out on the stock soon if we are able to break out past this RSI trend line. Now, something really important that you guys need to learn about, which I go over my videos, is something known as a look above and fail. Now, this is a more technical version of a false breakout, right? So the term false breakout could be a little bit misleading and not really explain what it is that we're seeing. What we're seeing in a false breakout is what I like to call a look above and fail. And the reason it's significant, okay, is because on this breakout here, this is the opportunity for bulls to step in and say that they have control, right? This is their chance, right? In this little box, if we get a breakout. Now, if we were to come down and bounce and, on that area, this is bulls showing that they are in control of the price action, okay? But if we don't see that, and what we see is a look above and fail, all right, and we come back down below the trend line here, what it's going to show you guys is that bears are actually in control of the price action. And the reason being is because right here at this moment, bulls had the full opportunity to give you guys a breakout and retest, okay, and show that they're in control. And if they don't take advantage of that opportunity, it's going to signify that, hey, this was a false breakout and bears are in complete control. And we're actually about to see a strong push to the downside. So you want to be mindful of that on the RSI. You also want to be mindful of that on the chart here. If we get a false breakout on the chart here and we actually drop back down into this pattern range, it's going to be very indicative of bears taking full control. And most likely we're going to break below that trend line here and move lower on the price action towards the bottom end of this bearish channel. Now, hopefully you guys enjoyed this video. If you did, smash that like button and subscribe to the channel. I'm dropping content like this every single week, dropping multiple videos a week. And if you want to support the channel, feel free to use that link in the description or the pinned comment down below. To get access to Simply Wall Street, you guys will get a 14-day free trial, as well as up to 40% off your membership purchase. Now, again, the plan with the discount, all right, if you get the yearly plan, that's going to put you guys at less than $200, which is a really great platform. And I think that that's a very fair price. I've paid that price. Okay. I paid the full price before I had the membership or before I had the affiliate link. All right. And now you guys, as my viewers, I can bring you guys a discount for something that I've already paid for myself in the past.